Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by a Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with a Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space. We're back for another episode of the Mortgage Broker Podcast. Today, we're a little bit of a different format here. We're actually recording from each of our desks. First time doing an episode here out of the studio. So hopefully this one translates well, and we're looking forward to being able to provide a bit of a different format and have more access to future guests and so on and so forth. So looking forward to this and how it all turns out. So this is a continuation of our Perfect Loan Process series. Episode 9 is where we first introduced the perfect loan process, and episode 13 and 14 where we touched on the lead process and the document collection process. Today, we are focused on the review stage and the review summary and strategy that goes along with that. This is really the guts of the file, and this is really where the file starts to unfold, and we ultimately start to figure out if this is an opportunity for a client or not, and really getting into the nitty gritty of including the loan specialist, the underwriter, into the process. Again, like we've prefaced on all episodes, you don't have to go and hire new staff to complete this. You can operate these roles on your own. And ultimately, we just want to be able to provide that framework for you so you can go and shape it on your own. Just as we've unfolded here, you can, as you start to do different parts of the process in different certain ways, you may find things that are a little bit better that fit your mold. And that's what it's all about, is making this perfect for you. Why don't we just start off, Derek? Maybe you can take it away. I got Derek and Jason with me again today. Derek, why don't you start off with just where does this really even start from a perspective of where does the review get started? And again, we know at this point we have all documents received.
Yeah, I mean, it's actually a pretty exciting part of the process as a mortgage broker, because you've kind of gotten through that first half of the process, which can be challenging. It can take months and months to collect all the documentation from clients at some points. And oftentimes you actually lose clients in that process. So if you've gotten to this point, it's definitely a positive. Now it's time to dig in to the numbers, figure out qualification, and then, after the next episode is actually having that conversation. How are you presenting it to the clients? But again, just on this piece, we've reached a point where we have all the documentation. So at this point, your documents should be filed, labeled accordingly. You should have an application in your system, Velocity, whatever you're using. So at this point, the associate mortgage advisor, because keep in mind, they've been hands-on with this client. They've helped them collect every single document. They've labeled them, they've filed them. So they're actually going in and doing what we call a pre-review, which is basically prepping the file for the underwriter or the loan specialist, whatever you want to call them, or yourself if you don't have someone working for you on a team. So the purpose of the associate mortgage advisor doing this scrub is we've always focused our process on people should focus on tasks that they're really good at and they're really efficient at. So the underwriter is clearly really good at figuring out qualification, understanding policy, looking for solutions. So we created this pre-review part of the process so that when the underwriter jumps in, the file's prepped. So what the associate's actually doing is they're going in and kind of scanning the documents. They're not doing a deep review into it, but they're scanning the documents. They're filling in any holes such as property tax, mortgage balance, because we've got a mortgage statement. A lot of times in the application, like we referenced in a previous episode, is, you tell people to kind of do it rough. Don't tell them to try to qualify and figure out their own income. A lot of times we have to change it anyways based on what a bank or a lender is going to accept. So again, the associate's jumping in, they're kind of looking at the app, filling any holes, pulling the credit, getting the file prepped so the underwriter can jump in. So that's the next task. And when the underwriter jumps in again, they're looking at income. A lot of times, because our process is so detailed, the income is going to be correct, but the underwriter is actually jumping in, looking at the last 2 years T4s, reading the letter of employment, looking at the pay stub for year to date. So they're doing a full review of the file. They're looking through everything from income, credit, assets, qualification, running the file based on different lender policy and guidelines, which we're going to dig into as we go here. But that's essentially the stage that we're at this point. We're actually diving into the guts of the file to figure out where this file qualifies, where we're going to land them, what different options we have. Oftentimes as a broker, you should be presenting more than one option. Maybe it's one lender that's going to allow you to get a a really maximum qualification with extended ratios. At the same time, maybe you're looking at a different type of scenario, maybe an insurable type qualification where rates are going to be a little bit better. So that's the point that we're at right now, is figuring out qualification. We have all documentation on hand, and the underwriter's jumping in to essentially do their piece.
That's a good spot for me to jump in. So the file is now essentially, it's in the court of the loan specialist or the underwriter, and what's going to trigger them is the fact that you mentioned that the AMA, the associate mortgage advisor, would have completed the pre-review, and they would have moved the stage in our CRM. They would have moved the stage to review, which is now triggering or tasking the loan specialist to jump in and start their work. And like you mentioned, like, they are reviewing all those documents, all those application details, all those items that, you know, you had the client roughly do for you in regards to pulling or filling out their own application. The associate mortgage advisor has now reviewed that, vetted all those items, and updated the file accordingly. This is now the loan specialist is not going to necessarily rely solely on the AMA for doing all those items. They are now going to be an effective second filter or set of eyes on those important details of the file, which is another really, really important piece of having, team members. You do get that area of filter or filtration where you don't have to worry that maybe something might be missed, because we got that second set of eyes on the file. And as the LS works through the process, this is probably one of the best parts, or definitely the key takeaway from this episode that I would recommend listening to clearly here is as the LS or the underwriter works through this process of reviewing and filling out what can and can't be done in their strategy session, they're actually completing a very detailed summary of the file in a template that we use, and it's the same template that we use every single file. And this is what we would call our review summary template. Derek, maybe you can kind of jump in there as like what details are being summarized as we go through this review, because this is really this is the foundation of the file going forward.
Yeah, and just referencing this template, and we'll talk about how it's used, but having all this information documented, like we've always found, is so important. Plus, from a level of like quality assurance, to actually look at something, to look at income and document, year to dates at this, and the last 2 years T4s are this, to actually take, the 10 or 30 seconds to write those into a template. I just think there's something mentally there that really ties you into that file. Like it stops you from forgetting, it stops you from making mistakes. And especially in the process that we've always ran, there's typically 2 or 3 people involved in every single file. So everyone being able to refer back to the actual proven confirmed income that's in this template is very helpful as you work through it. So again, I'm just going to walk you guys through this template top to bottom. Again, anyone with a better way, we've shared these before, but if you need them, they're going to be hosted on the internet. It's a great tool to implement into your business. So the first thing that we look at is income, right? Income's, in my opinion, the biggest driver in a mortgage application. So we get them to reference in the template. We outline, are they self-employed or employed or pension? So we actually make note of that. Then it'll outline, the businesses. So if they're self-employed, where are they working? If they own a business, what is the business name? How long have they been there? So we're writing, 3 years and 2 months. Income used. This is a big one. What type of income do we actually use in the application? So is it a 2-year average? Is it a letter of employment salary? Is it hourly, times 40 hours a week? So we actually write a description of what income we've used to qualify the file. And then the actual income amount, $84,000 a year. And below that, we outline the 2022 income. So if it was T4, T1 general, if there's dividends or whatnot, it's all outlined there, 2022, 2023, and then year to date. So that's all listed in the income section for every single client on the file. So again, like if you're an MA in the process that we run, a mortgage advisor, you're not necessarily in Velocity looking at this to see that. You pretty much have all the information that you need to have a conversation with the client. Say, here's what we've come up with for your income. Here's the documents that we've looked at, and this is what a lender is going to accept, right? So income's a big one. Obviously, as we all know as brokers, if you make a mistake on the income, your whole application can go out the window. So we put a lot of emphasis into that. The next piece falling down is down payment and assets. So obviously, if it's a refi, there's no down payment, but we still like to list out all the assets. We've always found that in the application, because we use the online application of Velocity, we've always found that clients seem to not put their assets in there, or they'll put like their car, but they forgot to put their RSPs. So we actually outline in this email all the assets that are showing. and reference. And then when I finish this, we'll talk about why that's important. But so there's a section that has bullets for all of their assets. We have an existing properties section. So if someone owns existing properties, we have two sections for this. Are they staying in place or are they being sold? So if it's staying in place, like a rental property or maybe a second home, we would have it all listed, everything from property address, estimated value, mortgage balance, mortgage payment, property tax, strata fee, and rental income. So we're actually adding all those numbers into this template. The property being sold section, we have it broken down with property address, estimated value, mortgage balance, real estate fees, legal fees, mortgage penalty, debt payouts, and then a line for estimated net proceeds. Keep in mind, this is not all going to be bang on. We don't know what they're going to sell their home for. Real estate fees, we always overestimate because you never want to underestimate with real estate agents. It's always better for them to have the conversation and let them know that it's actually cheaper. We put an estimate in for legal fees, and then a mortgage penalty. We usually take an estimate, but we always have reference that it needs to be confirmed with the lender because we never want to be on the hook for that. As we all know, penalties can change quite quickly in our world. So that's really nice for clients to see and look at and just kind of feel like, okay, you're expected to walk away with 180,000, and here's how we got there. It's really clean, it's easy, and it gives them an opportunity to come back and say, hey, you know what, I want to pay my car loan out too. So we got to factor that into the debt payouts, which is again going to impact the net proceeds. So that's basically like the client's personal situation, right? We've got their income, we've got their assets, we've got their credit. And sorry, I think I actually missed that piece. Credit and liabilities populate in here as well. I did. My bad on that. So we'll just put the borrower's name, their credit score that populates, and all the liabilities that show up on their credit report. So it'll say, TD Visa, $3,200 balance. This gives clients opportunity to look at that and go, oh, you know what? I actually paid that off a month ago, but Equifax hasn't reported that yet, right? So income, credit, down payment and assets, properties, and then if they're selling a property, it's outlined there as well. All of that is all the information that you need essentially to figure out qualification for their purchase or refinance, right? So the qualification section, as you could imagine, outlines your maximum purchase price, your down payment amount, your mortgage amount, insurance premiums, if it's the case, amortization, property tax, mortgage payment, strata fee, rental income, if applicable. And then we actually have GDS, TDS, loan to value, and qualifying rate all listed below that so that we can look at it, we can see it, we can feel it. For the mortgage payment section, we always just use an estimate because we don't know what product they're going to go with at this point. We don't know what rate it's going to be. So we typically try to find something in the middle of everything, and we'll just add a note that, plus or minus depending on rate, term, and product chosen. And then below that, depending on what you want to do with this, we'll always reference some interest rates that are available as of today. A lot of times, I guess, especially in the world that we're in today with discretionary pricing is something that you got to consider when you're quoting a client, obviously. Following that, we're looking at closing costs, right? So we'll outline what the property transfer tax is based on the purchase price that we're giving them, which we can absolutely figure out. And we do that for every single client. Legal fees, inspection, appraisal. And then, if it was maybe alternative or private lending, we would reference an estimate of what the fees are probably going to look like just so that the clients are aware. And then the last two sections of this review template would be questions. Again, a lot of times, even if you get all the information up front, like every document possible, a lot of times you're going to look at these documents and you're going to have questions, right? Like maybe someone has a collection on their credit bureau. We're going to ask, were you aware of this? Are you going to pay it? Has it been paid? So you're going to list out your questions, anything pending in the file, and then documentation required, right? So maybe someone sent in their T1 general, but it wasn't the full T1. It was the condensed version. So we're going to reference that. Hey, you know what? At time of purchase, we're going to need this. You might as well get it to us now. Maybe they sent in 60 days of bank statements. We should be seeing 90. So we'll reference what's needed in order to issue their pre-approval at the bottom. So I'm going to pause there because that was a lot. Any comments from your side?
Obviously, great detail, and that's kind of the whole point of this document is it's such great detail, and I just wanted to really highlight that piece of it. It is like the tell-all document or section of our CRM that again, back to it being the foundation of the file, it's something we can always go back to. So let's say, you do a review for this client, and maybe it's not the right time to buy all of a sudden. Maybe the down payment that they thought they had, they don't necessarily have entirely right now. For whatever reason, they're putting things on hold. It's a great resource to come back to when the file comes back to life, let's say 6-8 months down the road. It's just that constant foundation. And then the other piece I wanted to touch on is in the event that something changes, maybe that we got some information information incorrect, or maybe the client realizes that they gave us some incorrect information, or something changes that they're going to add a borrower to the file. Again, it's just you have that foundation. It's very easy to add and subtract from there. And so I just can't stress that enough. And I think the one comment I get from a lot of brokers when looking at this from just kind of the outside, from a real high level, without getting the detail that you just shared, or without actually looking at this template, is they say, hey, well, why are we doing all this extra work? Why are we filling all this this information out into this document when we just have an application in Velocity or FileLogix or what have you? Maybe just to that point, maybe you can just shed a little bit of light on that. And then Jason, maybe you can kind of chime in at any point as well.
Yeah, I was just going to ask a question just for you guys. I mean, with this very detailed snapshot that you have on the transaction, like how much communication is going back and forth at this point between the underwriter and the AMA? Or is it so detailed that from an efficiency standpoint, they don't need to communicate throughout the transaction? Like, I have to imagine in the busy markets, this is a really good tool for, or just a good overall snapshot to where we actually don't have to pick up the phone and communicate, because it's all documented back and forth between the two. So throughout the course of that process, is there a lot of dialogue that's going back and forth, or is it all pretty much being tracked within the system?
In theory, there shouldn't be really any communication back and forth if we've done the process properly. And back to like our first episode, which was the lead intake, right? Like if we've set that file up back when Jason did our role play, like that's where you're setting up the file notes, right? So like the underwriters jumping in at this point, they have the app, they have the docs, they know what they're trying to achieve because they've looked at the notes that outlines, what these clients are looking to do, when they're looking to purchase, how much their down payment is. The only time when you hit this stage, when there's going to be dialogue back and forth between the team before this can actually go to the client, is if there's missing information, right? If those lead notes were not completed in detail and we didn't outline what the down payment was, the underwriter is going to pick up this file and go, okay, well, how much, like what's the down payment? Is it all coming from sale proceeds? But I can see they have $100,000 cash sitting in their account, in their asset list. That's a gift. Like, is that also down payment? So again, like if we don't have enough information, or if we didn't ask the right questions, there's definitely going to be dialogue when this review is being completed. Sometimes it can actually be stalled. The underwriter might look at it and say, I can't even underwrite this file because, the notes say this guy's employed, but he's actually self-employed, right? And now we have the wrong documentation. So again, just back to like accuracy and importance of detail. But yeah, I mean, in a perfect world, when the file goes clean and the notes are good, the underwriter should be picking this up, reviewing it, completing it, sending it to the mortgage advisor and the associate mortgage advisor, which is essentially the next piece of this process. And what we would do is we would actually we don't send qualification or rates or anything of that nature, because every broker knows as soon as you give that to a client, they either think, okay, I'm good, I'm going to go write an offer, or they go, you know what, I actually wanted something different and I was expecting a lower rate and I'm going to call someone else without even having a conversation with you. So our process is that we pull the personal like application portion of that out, the income, the credit, the assets, the existing properties, the sale of a property. And we're actually pushing that out to the client saying, we want you to review this and we want you to respond back with any edits or adjustments if applicable. And as a next step, here's a link to book a call with the mortgage advisor. We're going to have a 30-minute planning session, right? So again, this kind of gives the clients a little bit. It tells them like, hey, we're done. We've figured out your qualification. It's time to talk. But we also want your eyes on this. And, some people listening to this might think it's, chaotic and it's too much and it's overkill. And to be honest, like we built it like this so that we avoid mistakes, right? And you think about the amount of people involved. There's an associate mortgage advisor, there's a mortgage advisor, there's an underwriter, and then we're actually getting the client to review their own information and tell us, yes, what you have is correct, right? And you'd be surprised so many times people go, you know what, I actually do have CCB, or I actually get OAS and I forgot to tell you about that, right? And then boom, all of a sudden your application's boosted up by 10, 15, 20,000. Whereas maybe they leave you and go to another broker and they ask that question, right? Now that other broker looks like a rock star because they got some additional information that you didn't have. And credit, like again, certain car loans don't register on a credit bureau, right? And if you're not catching that in a bank statement because you don't have access to that specific bank statement because it's not where their down payment is, that all of a sudden comes up 2 days before closing and you're hooped, right? So it gives the broker a lot of confidence that, if something does go a little bit sideways, you can always push back and go, hey guys, remember we had this call and remember you got this email and this didn't come up, right? Not that you want to be pushing blame anywhere, but at the end of the day, you got to protect yourself. And I think this is probably the highest level of due diligence that you can do as a broker to make sure that your information is accurate.
Yeah, I mean, like a lot said there, and like that totally addresses the why to my question of like, why do we fill out this full detailed report? And you just listed off like 3 use cases for it right there. Again, like I've had that feedback from a broker that's listened to this, or somebody I've had a one-on-one coaching call with, and that's saying, hey, like this just seems like so much work. Like it's already in Velocity, it's already in Fillogics. Well, again, Derek's points right there make it crystal clear, and that portion that we're sending to the client, like that's now a copy paste that's going into that email template. And these are some of the resources, again, we're going to add to the show notes of this episode. Is this review summary template that we're talking about, is the email that's going out to the client that's booking that call for the planning session. It's summarizing these items that we're talking about. Again, this is just a copy paste. It's creating a ton of efficiency down the road. So yes, it's a lot of work. It's creating a lot of efficiency down the road. It's making sure your client is staying transparent. And again, it's not always about transparency. Maybe they just forgot something. We made a mistake. Everything is being done properly from a transparency perspective when it comes to due diligence right then and there. And we've had that come up many times. It's like, hey, like, the file's blowing up at, like approval stage or what have you, or in subject removal stage, because, some information was missed, and the client saying, hey, you should have known this, where we have that resource of, hey, this is in writing. This is exactly what we said was going on in the file, and you agreed to it. Right. So having that written is huge. So basically, just to kind of wrap things up, like the file is now reviewed. So now what? And you mentioned that, Derek, like that email is being sent. We're booking the planning session. So when we say that email is being sent, like who is doing that? The associate mortgage advisor is actually jumping back in at this point. So for like the actual mechanics of what's going on in our CRM and with our team members, is the loan specialist has completed their review. They pasted this review summary into the deal, and they're moving the deal to file process pending PS. And so that's the stage that the file is going in. And so what that's telling the team, it's going to trigger the mortgage advisor, so the broker on the file. It's going to trigger the AMA, the associate mortgage advisor, to come back into the file and see and review the review summary that was just completed. That is also going to task the AMA to then go reach out to the client, like we talked about, send that first chunk of the review summary to the client for verification that everything is in line, and then ultimately book the planning session for the mortgage advisor to then conduct their planning session, which is going to be the next leg of our perfect loan process that we'll talk about in the next episode. So that pretty much wraps up this portion of the process. The one thing I wanted to mention is just some potential variables that could come up that may change things slightly when it comes to this process. And what that is really just what would trigger a revised review. So there's another stage that we use as a variable stage called revised review required. And what that is it's basically, just to go back one step, that email sent to the client, they've come back and said, hey, you missed this income. I actually have child tax credit, or I actually have a basement suite, or I'm looking at a property that's going to have a basement suite. These are variables that are going to change their qualification, change the review. And so when we get new information, we would trigger revised review required. And we would it's basically a change order to what's going on in the file. We'd note that change order in the review summary note section of the CRM, and then put the deal back into revised review. So we move the stage back. So it's no longer in file process. It goes back to revised review. It's going to trigger the loan specialist to go back in, make the changes that are necessary to the change order, and then put it back into file process. Those changes of stages are very important from a reporting perspective. As a leadership team, we can see what deals are getting stuck and how long deals are sticking in review. We can prioritize revised reviews based on the little of information and how quickly it can be adjusted. So we can prioritize those to get them out of our way from a loan specialist perspective. So there's a lot of good data points into actually changing the stages and tracking, hey, how many files now are we maybe making errors on, or why are so many deals going to revised review? We can start to look at that data and figure that out. So that's pretty much it from a process. So before I just kind of wrap up with scripts and email templates, is there anything in the process that I might have missed, or from Derek, from your point of view? And then maybe Jason, do you have any comments or any suggestions or things of value that you saw in that?
No, I think we've covered the bulk of it here. I mean, obviously the next conversation is going to be a little bit more minutia around the planning call and what happens from there. Are you submitting or issuing a pre-approval? So that'll be a detailed one and a good one. But yeah, I mean, for the sake of this conversation, like Dean said, there's always one-off situations where things will flip-flop a little bit. and you'll have to push them back. So I think just again, to follow up on his point, having the correct stage for those files, if it's being pushed back for a revised review, or maybe you've actually done the planning call with the client, but it's paused. Like we have a stage for, client waiting essentially. So yeah, no, all good. I think we've covered it pretty well.
I think my big takeaway is Derek mentioning just to get the client's eyes on stuff. Depending on how long the cycle of the approval or that process goes, we all know that things can be missed and things can change, and it changes due to many different circumstances. So I think my biggest takeaway on that would definitely be involving the client, having their eyes on the file, making sure that they're involved and engaged in that process. I like that. I think that's something that I probably as a newer broker back in the day, I probably wouldn't have thought about, because you want to try to maintain so much control over that file. But I really like that. And I think that would be a huge value add for brokers going forward.
So I do actually have one last comment to Jason's point. Our client's going to push back on this. Back to the initial phone call, like where you explain the process to a client of what's going to happen. They're fully expecting all this to happen, right? So they're actually getting notified, which Dean's going to touch on, like, hey, your documents are under review. At that point, the client knows that we're figuring out solutions, finding options, and then they're going to receive an email with an outline of their application and the next steps, booking a call. So just back to the very beginning, when you're on that lead introductory call, explain every step. Like, you're going to do an app, you're going to send in docs, we're going to do a review, we're going to be in touch with an email outlining your situation, and then we're going to be booking a planning call. So I think as long as they're fully aware and expecting these steps, no one's ever going to push back on this. And they'll probably prioritize getting on that phone call with you because they want to know what they qualify for.
Great points. Okay, so some of the scripts and email templates that we used here in this portion of the process. So your file is in review email template. So this is a short email that is sent to the client right when the deal goes into review. We actually talked about this in the last episode as well. And so this is just communicating to the client that, hey, your file's in review. Here's our expected timeline. And so our average timeline to complete a full review of a file will change based on how busy we are, where, how many staff we have. Is there vacation time? Is the market very busy? We'll actually communicate this turnaround time. We typically like to turn around a review in 24 hours. That's our goal at a minimum. The review summary template, of course, which we've dove very deep into in this episode. That's going to be another item that we'll share. And then lastly, the book a planning session and send review summary email template. So that is the associate mortgage advisor's version of an email template that's being sent out. This email is being sent to the client from the AMA to book the planning session for the mortgage advisor, and then ultimately summarize that portion of the review summary that we talked about. So that's a wrap on this episode. So we've touched on the lead consultation and intake in episode 2. Episode 3 was the document process and review, so the pre-review of files. And then this today was the review stage, review summary and strategy. So next session, we're going to be touching on the planning session and the strategy session that you're having with the client. So that's going to be all focused around the mortgage advisor. They're the staff responsible at that point of the stage or of the journey. And then we'll wrap up with the live deal to approved. That'll be its own episode. And then finally, broker complete to funded. So that will essentially round out the perfect loan process series. Some listener interaction to end this episode. We have a question from our listeners. So again, this is something we want. So if you have any feedback for us, if you have any questions for us, definitely send them our way. This is really helping us craft this content going forward. So I'll bring this question to the table here. So do you quote rates to a client, and do you recommend completing a rate hold with a lender? So Derek, how would you answer that?
Never quote rates up front, especially not specific rates. Like if someone wants to know a range, you can certainly tell them a range and then just explain that it depends where you qualify, down payment, amortization, everything else. But when you're doing the planning session, which is our next session, we always talk about interest rates. We talk about products. We talk about what people are doing. We talk about what we're suggesting and what we're seeing. And it's never a blanket statement. Everyone's situation is different, right? Some people are conservative. Some people want to gamble. So you really have to let the client make the decision on what product they want. Like our job as mortgage brokers is to educate clients on what's happening, what these products are and how they function, what the pros and cons are. And essentially through that conversation, you'll get an understanding of what they want. right? But when it comes to specific interest rates, yeah, you absolutely have to talk about it, right? If you don't talk about that and you wait until they get an accepted offer and then you drop that on them, there is an extremely high chance that they're going to go, that doesn't even sound very good. Like, I'm going to probably look at my bank, or I'm going to talk to another broker, right? So I think you want to get their buy-in from day one. You want to, you want to educate them as a client too. If you think about yourself, that if you don't understand mortgages, like, I wouldn't want to be out shopping for a home if I didn't know what my interest rate roughly was going to be, and I didn't know roughly what my payment was going to be. Like, how could you even pre-approve someone without them knowing that, right? So yeah, absolutely. And rate holds, I think, are important. Like, we've seen a crazy last 24 months with extreme rate hikes, and now things are coming down and life's good, but who knows, like, that could change. And if you're quoting someone 5.09 today and you don't do a rate hold, and for whatever reason the economy changes and all of a sudden that's back up to 5.29 in 3 weeks when they find a home, like, you're hooped, right? Now you're doing a huge buy down, you're making no money, or you're just losing that client. So there's a whole deeper conversation here with discretions from certain lenders, and you can't really quote with discretion, but I think it's important to say, like, this is what we can hold for you. And when you get an accepted offer, when you get a live transaction, like, we push as hard as we possibly can to get you the best rate possible based on your situation. And we'll continue to do that all the way until closing, right? If there's opportunity for further rate drops after, like, we always push on that. So yeah, I think rate holds are 100% important if you can do them with the type of lender that you're working with. And I think you have to have a conversation about rates, or you're not really doing your job.
Bang on. I wouldn't add any more to that. So yeah, thanks again for those questions. That's what we want. So keep them coming. And that's a wrap. So thanks for listening, and on to the next one. Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2024. This remarkable organization addresses a hidden hunger issue many are unaware of. In British Columbia, while school districts provide meals during school hours, numerous children face food scarcity at home, particularly during weekends. Backpack Buddy steps in to support these vulnerable children, ensuring they have easy to prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening, and see you on the next one.